Hi, Divesh is back again. We will do one more 6 marker question, which is with respect to ratio analysis. There will be 1 marker question. Either what is the significance of an ratio analysis or limitation of ratio analysis. Significance, they want to know which is the potential area which needs to be potential areas which needs improvement, and it will provide deeper analysis. Deeper analysis with respect to profitability, liquidity, and solvency. This will be 1 marker question. 6 marker question. Usually the ratios which is asked in exam is current ratio, quick ratio, or it is also known as acid test ratio, they will give you the balance sheet, or they will give you the number of items, and they will tell you find the liquidity ratios. These are the liquidity ratios. There are various ratios. One among that is liquidity. We have liquidity, we'll have profitability, we'll have solvency, and we'll have turnover ratios. Among this, the first, if they tell what find out the liquidity ratios, you have to find current ratio and quick ratio. Current ratio, what is the formula? Current asset by current liabilities. Examples in current asset: cash in hand or bank, debtors, or they will give you trade receivables. They will give you bills receivable. They'll give you tax payable. Bank bills receivable. We have stock, or they might give you inventories. Prepaid expenses. By now, you should know what are current asset and what are current liabilities. Current asset, which you will receive within 12 months, which you will pay within 12 months. This is payment, this is receivable. Then you have accrued income, short-term investments, or current investments. They will give you different names just to confuse. So please study the names. Then you have marketable securities, or it is also known as marketable securities. Now these are current assets. Now what are current liabilities? Current liabilities, you will have trade payables or creditors. Then you have bills payable. Then you have provision for taxation. Provision for taxation. Then bank overdraft. OD is overdraft. Then short-term loans. Income received in advance. Income received in advance. Short-term loans or borrowings. Short-term borrowings. Current liabilities, you have these items. Now, what is the formula for quick ratio? Quick ratio ka formula will be quick assets by current liabilities. Quick asset, current liability, you know all these items. But for quick asset, it will be current asset minus stock minus prepaid expenses. These two ratios will be will be asked in exam with respect to liquidity, or they might ask solvency, which I will be teaching now. Now, solvency ratio usually the sum asked is with respect to debt equity ratio and proprietary ratio. Debt. Now we are doing solvency ratios. Debt equity ratio. Debt equity, already you know. Here it will be long-term debt. Long-term debt divided by equity. Equity will be shareholders fund. What are shareholders fund? Share capital. Share capital might be equity or preference. Then you have reserve fund. You have profit and loss account. Long-term debt, you will have debentures, loans from financial institutions or borrowing from financial institutions or from banks. Next is proprietary ratio. Proprietary ratio formula will be proprietors. So, shareholders fund divided by net assets. What is this net assets? Net assets will be total assets minus outsiders liabilities. Outsiders liabilities will be only current. So total assets minus current liabilities, you will get net assets. So shareholders fund divided by net assets, you will have proprietary fund. Let's do one consolidated problem with respect to current ratio and solvency ratio. These are the two formulas, two types of ratios that will be asked in exam. One is liquidity ratios and one is solvency ratios. For this problem, we will do debt equity ratio. Total assets is 15 lakh. Total liabilities is 12 lakh. Total liabilities is excluding your shareholders fund. So let's first find out equity shareholders fund. How will you find total equity shareholders fund? First long-term liabilities will find. Then we'll come to equity. First, we need debt. So, long-term liabilities. So, long-term will be total liabilities is your 12 lakh minus current liabilities is 6 lakh. This is total liabilities divided minus current liability. So, long-term liability is 6 lakh. So, you got first item, debt by shareholders fund, correct? We got what is debt. Now we shall find out shareholders fund. How we will find shareholders fund? We have total assets. Total assets is 15 lakh minus total liabilities including long term and short term is 12 lakh. 3 lakh is your shareholders fund. So it is just 6 lakh divided by 3 lakh. It is 2:1. This has to be written like this. The 3 ones are 3 twos are 2 by 1. It has to be written in the form of ratio. So 2:1 is the ratio. Now, in this is debt equity ratio. We shall see one problem with respect to giving working capital. Working capital is current asset minus current liability. Now we have working capital. Working capital is 90,000. So working capital formula will be current asset minus current liability. You don't know what is your current asset, what is your current liability, but the ratio of current ratio is given. So 3.51. So we shall assume let the current liability be X. Assumption 3.5 minus 1x is equal to working capital is 90,000. 2.5x. 3.5 minus 1 is 2.5. 90,000. 90,000 divided by 2.5 will be equal to x. So 36,000 will be equal to x, which is nothing but your current liability. Now you know what is x. So what shall be 3.5? 3.5x into 3.5 into 36,000. That will be 1,26,000. You know what is your current asset? What is your current liability? You have to write what is working capital formula, compute what is current liability, and compute what is current asset. This is again 6-marker formula. Next, in the next upcoming class, I will be doing the analysis of financial statements where you will learn comparative and common size. For this, you shall learn first the Schedule 3 format for financial statements. Thank you. If you're liking it, please share it with your friends, which shall help them to prepare for their examinations.